It's great to have your company here on Business Now. Let's take you around the country and just show you how the housing markets responded to that interest rate cut by the Reserve Bank last week. Nationally, there were 1,540 auctions, and of those, 69% were sold, which is pretty healthy. In Sydney, the clearance rate was off just a little, 576 auctions, but just over 64% of those were sold. Melbourne, though, totally different story. 642 auctions, it's strong. 77.6% of those were successful. It was only bettered by Adelaide, which had 55 auctions and a clearance rate above 78%. In Brisbane, 54 auctions, 63% of those were sold. And in Canberra, 33 auctions, a clearance rate close to 72%. So let's bring in here Angus Moore, Executive Manager of Economics at RBA Group. Angus, it's not last week's rate cut, I suspect, but the prospect of 2 or 3 more rate cuts that will have excited potential property buyers.
Yeah, thanks for having me, Ross. And you're exactly right. While one rate cut's certainly going to help buyers and existing mortgage holders and boost borrowing capacities, it's really the fact that we're going to see a few more, and the fact that the RBA's outlook for the economy remains pretty good. Inflation looks like it's now under control. Unemployment looks like it's going to stay pretty low. That means we're going to see some more rate cuts that'll help boost borrowing capacity even further and give buyers a bit more confidence as we head in towards spring.
So there's a couple of bits and pieces here. It's about housing affordability. And the reality is, with interest rates going down, affordability improves. But also, with above inflation wage rises that we've seen for the past couple of years now, that also improves affordability for people and their mortgages.
Yeah, falling rates is obviously going to be a big bonus for prospective home buyers in terms of improving affordability. And when we say affordability here, really what we mean is serviceability. That is, can you afford to pay the mortgage on the home that you want to buy? The thing that probably isn't going to be improving particularly quickly is the deposit burden. That will remain a challenge. That's mostly a challenge for first home buyers who are younger, earlier in their career, haven't built up their wealth yet, and so don't necessarily have that 20% down payment. That isn't influenced by mortgage rates. That's just a function of home prices and wages. But for many people, what matters is that mortgage serviceability and how much you can borrow. And as we see more rate cuts, that is going to improve.
And the other story about serviceability or affordability is actually the price of homes themselves. Now, in places like Adelaide, Brisbane, that are at all-time record highs, Perth as well, but as compared with, say, Melbourne, where property prices have fallen, we spent a bit of time talking about Melbourne in recent times. That's where affordability has genuinely improved, with that trifecta, if you like, of falling home prices, falling interest rates, and the increase in real wages.
Yeah, exactly right. And, it's worth noting that Melbourne hasn't seen as much of a deterioration in affordability as other markets. It's still a lot more challenging than it was in, say, 2021 when rates were at record lows. But the fact that home prices haven't increased, nearly to the same extent as we've seen in Adelaide, in Perth, in Brisbane, means affordability is a bit better there. And that is showing up in activity. We're seeing more first home buyer interest and more successful first home buyers in Melbourne and in Victoria than we are in other states, in part because of that relative affordability.
OK, so given the interest and the affordability, does that mean that Melbourne, say, for example, is a better place for developers to be looking now as well, because there is likely to be a little bit more interest in the properties that are for sale, and they potentially are more affordable as well? But then you've got a lag between when you start building and when you finish building, of course.
Of course, the new homes market has been a really challenging sector for the past few years. It's a story we've been talking about quite a lot. And it's not just in Victoria where that's been the case. Across the country, we've been seeing big increases in the cost of building new homes. Raw materials have increased enormously. It's been really hard to find labour, in part because the unemployment rate's been really low, but also in part because there's been a lot of state government infrastructure projects going on that's been absorbing a lot of what would otherwise be construction employment. Those headwinds look like they're starting to fade. We're not seeing big increases in building costs at the moment. And so that's going to help to make more projects a bit more viable. The fact that we're also seeing home price growth, particularly in places like Melbourne, which is a big turnaround from what we have been seeing, is also going to help to improve project viability. So that will start to make building new homes a bit more attractive for developers.
It's going to be interesting. How many more rate cuts does RBA Group have in your central forecast at the moment?
So we're expecting we'll see probably 2 or 3 more rate cuts from where we are at the moment. And the basis for that is just that inflation looks like it's going to be around the middle of the target band, broadly speaking, as the RBA is expecting. and unemployment looks pretty stable at the moment. That should enable a few more cuts from here, whether it's 2, whether it's 3, bit hard to know. And of course, a lot depends on how things pan out globally. Yes. A lot of uncertainty there that could really shift that picture.
Angus Moore, always good to chat to you. Many thanks for your time today.
A pleasure. Thanks.